If you are struggling to grow your small crypto trading account, then this video is for you. Now in this video, I'll be breaking down 10 proven strategies to grow a small crypto trading account. So if you are trading with $10, $20, $50, or even $100, then these 10 tips I'll be talking about in this video will really help you scale your trading account while managing your risk. So stick around and watch this video to the end so that you don't miss any important information. So let's get started. Now, the first strategy to grow a small crypto trading account is to start with a solid trading plan. Now, before you place a trade with your small crypto trading account, you need a very good trading plan. Now, a good crypto trading plan outlines your strategy, your risk management rules, and your trading goals. And if you have a small trading account, you should be able to understand the following things I'm about to mention and include them in your trading plan. Now, the first thing you must understand is the type of trade you want to be taking and include it in your trading plan and stick to it. Now, is this scalping you want to be doing? Is it swing trading? Is it day trading? Whichever one it is, you must be able to stick to it and include it in your trading plan. So if you want to grow your small crypto trading account through scalping, stick to that. Or if you prefer day trading, stick to that too. Now, the next thing you must understand and add to your trading plan is your risk to reward ratio for every trade. Now, when you're talking about risk to reward ratio, we have 1:1, we have 1:2, 1:3, 1:4, 1:5, and so on like that. But I won't bore you with all of these risk to reward ratios. I will just talk about the risk to reward ratio I always prefer to use when growing a small crypto trading account, and it is the 1:2 risk to reward ratio. Now, what does it mean when you are using 1:2 risk to reward ratio? Now, this means that your take profit should be double of your stop loss. Now, let me explain. For example, if your stop loss is to lose 5% of your capital, then your take profit will be set to make 10% profit for you. And if your stop loss is to lose 10% of your capital, then your take profit will be set to make 20% profit for you. I hope you get it. Now, with this risk to reward ratio, you only need to win at least 4 trades out of every 10 trades you take. So you see, with this risk to reward ratio, you don't need to be winning a lot of trades at all. You just need to win at least 4 out of every 10 trades you take and you'll be profitable. Now, the third thing you need to understand and add to your trading plan would be the maximum percentage of your account you want to rake for every trade. Now, let me explain. For example, if you want to start trading with, let's say, $100, you can decide that you never want to risk more than 1% to 2% on every trade. Or maybe if you want to take higher risks, you can say you want to risk the maximum of 5% to 10% for every trade so as to protect your capital. And it also depends on your trading strategy. So these 3 things should be in your trading plan. And if you want to grow a small crypto trading account, make sure you stick to your trading plan. It is very, very important. Writing the plan is very easy, but trust me, sticking to the plan is very hard. But when you stick to your trading plan, you will thank yourself later. Now, the second strategy to grow a small crypto trading account is to trade only liquid and volatile assets. Now, what do I mean by this? Now, liquidity is very important when you are trading a small crypto trading account. You need to stick to major coins like Bitcoin, Ethereum, Solana, and so on because they have high trading volumes and they have lower spreads. And I'm going to advise you to avoid trading some altcoins with low liquidity because they can be easily manipulated. For example, when I started trading as a beginner, I avoided so many altcoins. I was only trading Bitcoin and Ethereum. Those who knew me from when I started know this. I didn't have to bother myself with the absurd movement of some altcoins or meme coins because the price movement of some of these meme coins can cut you out of a trade when you won't have a good analysis. So always stick to the major cryptocurrencies. So again, if you want to trade and grow a small crypto trading account, try to focus on major coins like Bitcoin and Ethereum. Now, the third strategy to grow a small crypto trading account is to use leverage responsibly. Now, leverage can help you grow your account faster, but it can also wipe out your account. You can go from $100 to 0 in minutes with the wrong leverage. Now, as a beginner who is trying to grow a small crypto trading account, I will advise that you use low leverage like 5x, 6x, up to 10x leverage so as to avoid liquidation. Because the higher the leverage you use, the more risky the trade is. And trust me, you don't want to see your $20 or your $50 go down to 0 in minutes or in seconds. So avoid using really high leverage, and I only advise that experienced traders should be the ones using higher leverage. And when you start trading with low leverage like 5x to 10x and you see that you are getting consistent with your profit, then you can now consider increasing your leverage. That's if you want to. And another tip I'm going to give you here is that never use high leverage during volatile market conditions. Now, what do I mean by this? Now, you see that period when the market starts to go really up or really down, avoid using high leverage in that kind of situation. It can really do you bad. And always check your liquidation liquidation price when you are using leverage. This one is very, very important. But in case you don't know what liquidation price is the price where you lose all your money. So in summary, if your futures trades goes against you and it goes down to liquidation price, you lose all your money. So be very, very careful with the leverage you are using and with your liquidation price. But if you don't want to lose all your money to liquidation, you need to understand risk management. And that's what will take us to the fourth strategy to grow a small crypto trading account, which is to master risk management. Now, risk management is the difference between a profitable trader and a gambler. Now, risk management is what prevents you from losing all your money in crypto trading. And here are some essential risk management tips for growing a small crypto trading account. Now, the first and means we're giving you is never risk more than a small portion of your total account on one trade. Regardless of how confident you are about that setup or about your strategy, never lose more than a small portion of your account. And the reason I'm saying this is because your account is really small, so why do you want to risk so much money on just one trade? So if you are serious about growing your small crypto trading account, never risk too much on a trade. Now, the second risk management tip is to always place a stop loss order before entering a trade. Now, this prevents bad losses and helps you to maintain consistent risk management in your trades. And by using stop loss orders, you are protecting your account. So please always set stop loss. In as much as you have a good trading strategy, always set stop loss. And in case you need different profitable crypto trading strategies, I have videos on them. The links to the videos will be in the description below. Now, the third risk management tip is to never add to a losing position. Now, what do I mean by this? So there are some scenarios when you are losing a trade and you are tempted to add more margin to your trade so that you can average down the trade. Please don't do this. Don't try to add more money to a losing trade. Now, the fourth risk management tip is don't risk money you can't afford to lose. Now, for example, if you know you can't be okay if you lose a particular percentage of your capital, then you need to reduce your stop loss so that you don't lose up to that amount in case that trade goes against you. And lastly, always have a clear strategy for your take profit. This one is very, very important. And you can even learn this from the complete crypto trading course. The link to register for the course will be in the description below. Now, by following all of these risk management tips I've talked about consistently, you are protecting your capital while giving yourself the opportunity to grow your small account steadily over time. Now, before I go to the fifth strategy to grow your small account, please like this video. You'll be learning something valuable from this video, and kindly subscribe to our YouTube channel. We are trying to hit 200,000 subscribers very soon. Thank you. Now, the fifth strategy to grow your small crypto trading account is to learn technical analysis. Now, technical analysis helps you to find good entries and exits. Now, when you are trading with a small crypto trading account, mastering technical analysis is very important because it helps you to make more informed trading decisions. And with technical analysis, you can easily identify potential entry and exit points. You can understand market trends, and you can even spot profitable trading opportunities. Now, here are some reasons why technical analysis is particularly important when you are growing a small crypto trading account. Now, the first one is that it helps you to minimize losses by identifying key support and resistance levels where price might reverse. And the second thing is that you can spot trends very early and ride them for maximum profit. And the third one is that it helps you to improve your trading accuracy. Now, these and many more are reasons why you need to learn technical analysis, and it is very, very important as a trader. Whether you want to grow a small trading account or not, you need to learn technical analysis. And if you want to effectively use technical analysis with a small crypto trading account, you need to learn basic chart patterns, you need to learn how to read candlestick patterns, you need to master a few important indicators rather than trying to use too many at once, and you also need to practice identifying trends, whether uptrend, downtrends, or sideways trend. And I have videos on all of these things I've mentioned in my technical analysis playlist. The link to that playlist will be in the description below. Now, I want you to remember that technical analysis is not about predicting the market with 100% accuracy. Instead, it's about finding high probability trade setups that give you an edge in the market. And when you combine proper technical analysis with proper risk management, you'll be able to grow your small crypto trading account consistently. Now, the sixth strategy to grow your small crypto trading account is to avoid overtrading. Now, the more trades you take does not mean that you'll make more profit. A lot of beginners think that this is a lie. Now, you don't have to be trading every day because you want to quickly grow your small crypto trading account. You don't have to. Overtrading leads to unnecessary losses and even emotional trading. So I will advise you to stick to a specific number of trades per week. And moreover, you should only trade when you see good entry points or levels from your technical analysis. And that is why I said earlier that it's very important important for you to learn technical analysis if you really want to grow a small crypto trading account. And remember, it's better to make one good trade than to make 10 bad trades, because quality over quantity is very important when you are growing a small crypto trading account. Now, the seventh strategy to grow your small crypto trading account is to focus on high probability setups. Now, not every trade is worth taking when you are trying to grow a small crypto trading account. Trust me, only trade when your analysis is giving you a high probability setup and when the risk to reward ratio is favorable for you. Also, I want you to remember that high probability setups don't guarantee profit, but they give you a better odds of making profit in the market. And when you are trading with a small crypto trading account, you need all of these high probability setups to consistently grow your capital. Also, please don't try to force trades just because you want to be active in the market all the time. Now, the eighth strategy to grow your small crypto trading account is to learn from your mistakes. Now, you see, every trade is a learning opportunity. Whether you win the trade or you lose the trade, you should always focus on learning something from every trade you take. And even some weeks ago, I posted on my Instagram page that no matter how long you have been trading futures, each trade teaches you a lesson, whether it is a win or whether it is a loss. So you see that even people who have been trading futures for so long, they keep learning from every trade they take. And it is simple to do this. The first thing you just need to do is to keep a trading journal. Now, in your trading journal, you should be able to record every trade you take and everything about the trade. Now, for example, in my trading journal, I always put down the following things. I always put down the trading pair. For example, let's say I'm trading BTC USDT. I write it down. Then I write down the time I entered the trade. I put down the time frame I used for that analysis, and I put down the strategy I used for that trade. And I also enter the reason why I entered the trade. Then I also write down the risk to reward ratio and the leverage I used for that trade. And once the trade has entered my take profit or the stop loss, I write down how much I made or how much I lost from that trade and the percentage I made or that I lost. And also write down the lessons I learned from that trade. Now, doing this will really help you, trust me. And you just need to get a jotter to do this or use the note app on your phone for this. And by the time you keep learning from every trade, you see that you keep getting better every day. Now, the ninth strategy to grow your small crypto trading account is to avoid FOMO and emotional trading. Now, the fear of missing out, which is also known as FOMO, leads to bad decisions. And what does FOMO mean? Now, you know that moment when you see people talking about a particular coin that they are trading and they are showing off their profit? When you see that, you might also want to quickly trade that coin and try to take your own profit and get out of the market so that you don't miss out. Now, that's FOMO, fear of missing out. But it's always a bad thing to do, trust me. Some people will see that because someone is trading a coin, they'll just jump on it and be trading that coin without any form of analysis, thinking that they will also make profit like the other person. Now, never trade a coin or enter a trade just because everyone else is talking about the trade or everyone else is taking that trade. Stick to your own strategy and wait for your own setup, and you will thank yourself later. And when it comes to emotional trading, it simply means trading based on your emotions rather than your strategy or your analysis. Now, this often happens when you are feeling fearful or when you are greedy or when you are frustrated with your trading results. So, for example, if you're angry because you lost a trade, you might immediately enter another trade without any proper analysis because you want to try to recover your losses quickly. That is emotional trading, and it is very dangerous for your small crypto trading account. Another example of emotional trading is when you are in profit already, but you become too greedy and you don't take your profit according to your strategy. Now, instead, you hold on to that position, hoping for more profit, only to watch your profit disappear when the market reverses. Now, emotional trading can also manifest when you are feeling anxious about missing opportunities, which can lead you to enter trades without confirming your trading signals or following your trading plan. So these are just some scenarios where emotional trading can come in, but it is very bad. And to avoid emotional trading, I would advise that you do the following. Now, the first thing I would advise you to do is to take regular breaks from the chart. The second thing is to use a trading journal to track your reasons for entering every trade. And the third one will be to set trading rules and stick to them. And the fourth one is never trade when you are stressed or when you are tired. Now, follow all of these tips and you will see that emotional trading will not be part of you anymore. Now, the 10th strategy to grow your small crypto trading account is to withdraw some profit regularly. Now, when I started making some consistent profit from crypto trading, I made sure to withdraw some profit every month. Now, the reason why I was always doing this was to make myself understand that I'm making money from this thing, and it's something I would advise you to do. Now, there are some of you, you're always trading and you're making profit, but you have never removed some profit for yourself. How then can you say you're making money from crypto trading? So try to withdraw some profit regularly for yourself once you start making consistent profit. And you need to understand that profit taking is more important than making profit. So let's, for example, you are trading with $100 in your small crypto trading account, and maybe you've turned that $100 to, let's say, $200 after 1 month. Consider withdrawing like maybe $50 for yourself for that month and leave the rest to increase your capital. I hope you get it. And there you have it. These are the 10 strategies to grow your small crypto trading account. But before I go, I would love you to tell me which tip you found the most useful in this video. Please drop it in the comment section below. And if you enjoyed this video, please like this video and please subscribe to our YouTube channel. Again, we are trying to hit 200,000 subscribers. Thank you so much for the support and I'll see you in the next video. Bye.